Hello and welcome to the Future of Real Estate. I'm Brent Ellis with the Ellis team at Keller Williams. Today I want to talk about our December 1st Southwest Florida real estate market update. We've done one since Hurricane Ian and it's time to do another. So I want to talk to you about what was going on before Ian and what's been going on afterwards. And this screen here, you're going to see the inventory starting to rise again. And in fact, it's just above the trend line. This is for the single family homes and then this is for the condos. But what I really want to focus on, and this is the official listing inventory, I want to look at a couple things. Here's the home close graph, and if you notice, green is 2022. We've fallen behind the last 4 years, and the Fed started raising interest rates in March, and we were just behind 2021, and then the interest rates started coming. You can see they've slipped behind all those years. So what's that done for sales prices? As you can see, prices were rising up until about April. They leveled off in May and they've come back down now. So just to give you an example, the median price in April was 470. It was 469,950 in May, and it's down to 425 now. So we've lost about what is that, $45,000 in median price. If you go up to average price, it was 658, fell to 587 in June, down to 550. It shot up 1 month in August, then down again in September to 534, and it's down to 531. So from the peak, 658 to 531 is about $120,000. You generally see bigger price changes on the average than you do the median. The median is considered a little bit more stable. So that's kind of what we're looking at. The other thing that I track, you might find this interesting, I don't know. I track the daily inventory levels and then of homes, condos, manufactured homes, that sort of thing. And I see them going up here to pretty much pre-hurricane levels. And then we calculate our current market index here. I see that going up, so that's not a great sign for prices going forward. But then I'm also looking at the pendings and the pending contingents, and then I also look at the differential. Right now, if you go back to June and sooner, we had negative numbers, meaning properties were coming off the market faster than they were coming on. That all changed on June 14th, and since then it's been building, and now we're at our biggest number yet in November. That's kind of a precursor of what's coming. Let's look back to the hurricane. It shot up 2 days before the hurricane. It was 1468. It went down because the properties went off the market, but then it started building back up again, and that's where we are. So these interest rates have taken a cumulative effect on the market. That's what the Fed intended. To get inflation down, they got to get home prices down, they got to get gas down, food down, wages down, unemployment up. They're trying to hurt the economy, and they're doing a pretty good job of it. I'm not saying right or wrong. That's how they have to do it. And so that's where we are. That's your post-Ian hurricane update, your second one, and your December 1st Southwest Florida real estate update. Call us. I can be reached at 310-6500. That's area code 239. And we can talk about your situation if you've got a home to sell. And if you've got real estate questions, whether you've got hurricane damage or not, we're here to answer your questions and kind of give you a guide as to what we're seeing in the market. Nobody tracks the numbers the way we do, and we'll be glad to help you out and give you the best advice we can. Thanks for tuning in.
If you're selling or you're buying or moving right away, the Ellis team can help